Okay, hi there. Welcome to another in our series of Theme 1 Microeconomics videos looking at markets in action. And this time we'll take a look at the market for cocoa. Now, cocoa is a cash crop for some of the world's poorest farmers. Most cocoa is grown by smaller farms. Indeed, according to the International Cocoa Organization, 90% of world cocoa production originates from small farmers. So there are some potential economies of scale, but the majority of cocoa supply comes from smallholders. Crucially, we're looking at this market because it's a great example of where there's a significant amount of price volatility. This chart, I think, really helps to show the extent of the fluctuations in price in the world cocoa market. The price has varied between $1.90 per kilogram to perhaps just over $3.50 per kilogram if we look at the price chart here over the last 10 years. Some significant price volatility. More recently, the steep fall in prices in 2016 into 2017 and then the prolonged period of very low prices at or around just $2 per kilogram has been especially difficult for producers. Some signs that cocoa prices have recovered recent times, but we're really talking here about a story of very low prices in the last 3 or 4 years. It's crucial to understand, I think, the idea of the supply chain in an industry. So let's take a look at the cocoa supply chain. We go from the extractive stages, the cocoa farmers who plant and grow and then harvest the cocoa beans. These beans might be then sold to export companies. They may well then be passed on to a bean grading company for shipping, perhaps outside of Ghana or the Ivory Coast. The cocoa beans are then processed and eventually, of course, they're manufactured into, their raw materials are then manufactured into final products, confectionery items, chocolate cakes and so on. These are then passed on to retailers who sell the products to the final consumers. Now, crucially, at each stage of the supply chain, there is something called value added. You'd expect the overall price to keep going up as we go through each stage. One of the abiding characteristics of the market is that most cocoa farmers, most cocoa growers only get a very small percentage of the final price that we pay for our chocolate bars and chocolate cakes in the shops. Cocoa beans are typically produced in tropical zones around the equator. That's where climatic conditions are well suited for growing cocoa trees. They feel like there's a natural comparative advantage. Indeed, around 2/3, perhaps even 3/4 of the world's cocoa beans come from just 4 West African countries: Ivory Coast, Ghana, Nigeria and Cameroon. Indonesia and Ecuador also significant producers. The key growth and development point, I think, initially is that Ghana, if we take this as an example, is basically exporting raw cocoa beans. And in fact, only around 30% of the cocoa crop is actually processed into products, which is where there's a greater value added to be made. So the Ivory Coast and Ghana are, by some distance, the world's biggest cocoa bean producers. And Ghana, of course, is a country where agriculture remains a significant part of the economy. This chart shows the structure of the Ghanaian economy and how it's changed over the last 10 years. It shows the percentage of GDP for each of the 3 main sectors in the economy. So the percentage of farming in GDP has declined from 31% in 2009 to 17% in 2017. But there's also actually been a decline in the relative share of manufacturing industry, which was 27% in 2012, but now just 24% in 2017. Although, I suppose crucially, although farming or agriculture takes up just under 20% of GDP, in fact, farming continues to employ around 40% of the labour force, which hints at the relatively low productivity in that sector. Before we look at the microeconomics of prices, I just thought I'd take a little focus on some of the wider macroeconomic context for Ghana. Ghana is a lower middle income country. Their gross national income, GNI per capita, in real terms, adjusted for purchasing power parity, was just over $4,000 in 2017. Their GDP is actually a little higher than that. So there may well be an outflow of profits remitted to transnational companies. They don't score particularly well in the Human Development Index. They're 140th out of 179 according to the latest HGI data. They have a relatively high Gini coefficient of 0.42. The Palmer ratio, which is the income of the top 10% of households divided by the income of the bottom 40%, is 2.1. And here's an interesting snippet of information that the World Bank now publish something called working poverty. So instead of just using $1.90 per day as an extreme poverty measure, they look at the percentage of people in work who are earning less than $3.10 a day, and that in Ghana is over a quarter of the labour force are basically defined as in extreme working poverty. Again, a bit of context here. One child aged 5 to 17, one child in 5 is in work. Child labour is 20%. 40% of the employed labour force is in farming. Only 25% of the labour force are in skilled jobs. There's very low research and development as a share of GDP, and a third of the rural population doesn't have any access to electricity. Hopefully this gives you a little bit of context for Ghana. It's clear that farming is important, but many cocoa farmers in Ghana live in extreme poverty. They lack access to basic services such as healthcare and education, and of course as a result of that they're forced to use their children as labourers. Ghana is the 71st biggest export economy in the world, and this chart is very instructive. I think it shows the pattern of export trade, merchandise export trade for Ghana, and it shows the importance of gold and cocoa and crude oil. They have a relatively low level of economic complexity here. There aren't many parts of this patchwork quilt. They only export a relatively few number of products. In other words, their pattern of trade is highly skewed, if you like, to gold, to cocoa and to crude oil. So why have cocoa prices been falling? We saw the chart a few minutes ago. In recent times the price has been falling. Well, clearly there are two sides to the market. On the demand side globally, there is some evidence that consumers are becoming more health conscious, and especially given the issues to do with obesity and type diabetes. Some countries, of course, have brought in sugar taxes in the last year or two. So health conscious consumers may consume less sugar products, cocoa products. There's also been a series of years where real incomes have been squeezed. Millions of people have seen their real disposable incomes falling over the last 10 years, and slightly more premium cocoa products perhaps have a strongly positive income elasticity of demand, so that might have held back demand amongst the sort of median consumer, if you like. So demand hasn't grown particularly strongly in advanced countries, although it is growing in emerging markets. And there is, of course, still increasing demand for premium chocolate products. People are prepared to pay a premium price for that. On the supply side, the main reason why cocoa prices have been falling is that the climatic conditions have been particularly favourable. So we've had very favourable weather conditions, especially in West Africa, and that's increased the market supply and actually led to a high level of unsold stock or inventory. So globally, the cocoa market has been in surplus. Supply has exceeded demand for the last 2 years, and when there's a high level of stock or inventory, that tends to put downward pressure on price because there's excess supply. That's in the short term. In the long term, there's a big issue to do with the sustainability of cocoa production in the biggest growing nations, many of whom are vulnerable to climate change. For example, the increased production that we've seen in the Ivory Coast and in Ghana has also been associated with more rapid deforestation in the native growing areas. Indeed, according to a recent report in Business Ghana, more than 90% of West Africa's original forests are gone. 40% of the cocoa trees need replanting. There's clearly problems to do with water scarcity as well. As a result, cocoa yields, the yield per hectare, if you like, are declining across Ghana. So there's a long-term threat to cocoa supply, which of course could increase price going forward. So very quickly, just to finish off with, let's think about how we could use a little bit of analysis to show the changes in price. there's a fall in demand for cocoa, then we would see an inward shift of the market demand curve from MD1 to MD2. And in the absence of any change in the supply curve, an inward shift of demand causes the price to fall from P1 to P2 and less cocoa to be traded in the market. So an inward shift of demand causes prices to fall. And we also mentioned a minute or two ago the impact of favourable supply factors, better than expected cocoa yields. And so in this diagram, we show the effect of an outward shift of supply, causing the price to fall as we move down the market demand curve. So weak demand and increasing supply, we could put the two on the same diagram, but I just thought I'd separate them out, would both cause cocoa prices to fall in the market. Long term, going forward, I think Ghana needs to exert more control over the prices they get from growing those cocoa beans well before they reach the final consumer. Indeed, there are some signs that there's increased cooperation with the Ivory Coast to try and give them more market power on the supply side. But I think going forward, it's even more important for Ghana to take a higher slice of the value added from cocoa at each stage of the supply chain. So instead of just growing cocoa beans, they need to process, perhaps even manufacture their own chocolate products. Because value-added industries, such as processing and then manufacturing cocoa-based products, are more profitable, and they also stimulate job-creating manufactured goods. I think this is crucial for Ghana to make those longer, stronger development gains and make economic growth more inclusive. The cocoa market is interesting because it links a lot of microeconomics that you might have been taught, and it's also very important from a sort of growth and development perspective for countries such as the Ivory Coast and Ghana. Okay, I hope you found that video useful. Check out some more of our markets and action videos as we go through the course this year. Thank you.